Good evening, guys. It's Monday, March 20th, and I'm going to do our review. Keep this simple and sweet and short tonight. This is the overall markets, what they did today. That the futures markets are moving after hours. That's 8 p.m. right now, 8:05 Eastern Standard Time. But I don't know why I didn't open that up a little bit bigger, but you can see the S&P today right here, right there, is up all 8.89%. The Dow was up 1.2%. It doesn't show the Russell after hours for some reason, and the NASDAQ was up 0.39%. So the NASDAQ has been the strongest. Looks like the Dow took over today, which is just really, they rotate back and forth a lot of the time. And the 10-year note, which is really a measure of inflation, went up by 2.5% today. I would have to look at that on a chart to see really what's that mean in the scheme of things. We got the Fed announcement tomorrow, and with the state of the banks and everything going on right now, I checked out FedWatch. You can look up FedWatch at the CME, and I think they're putting like a 60%, maybe even 68% chance of a quarter point interest rate hike on today or for tomorrow. And I think it's like a third, whatever the difference is, 38 or 32% or whatever's left, is no change. So that's interesting. We'll see if the Fed pivots here. Actually, I think historically, if the Fed pivots, it's actually not great for the markets short term, but it's better for the markets probably long term. Them pivoting means that they stop raising the rates for what it's worth. So that's that. Oil really shows up best here because the futures are moving. Went up almost 2% today. It's handy. I got into an oil trade early when it was down, so that's good. That's what that's doing. I'm going to flip over to the stockcharts.com, and we'll look up, get a feel for what the internals are doing. The New York bullish percent charts, the BPI, bullish percent index. Sorry. They're up 0.88% today. No big shakes. They're in a point and figure sell signal. The industrials, just the Dow itself, actually was no change today. It's sitting at 30 right now. It needs to get reversed to 36, so it's got a ways to go. Transports, no change today. They're at 25. They need to get to, that's 24, 26. They need to get to 28 to reverse. The SPX, which is the big one, it's actually moving positive, 5.07% today. We'll see if this is possibly going to reverse down here, at least short term. And then the ones that probably matter the most right now, the NASDAQ, the NDX, it rose today, and it's back in a column of X's. It is in a point and figure sell signal because the previous, or the most recent column of O's exceeded the previous column of O's to the downside. This thing's got to get up past 46 to put in a new point and figure buy signal, which isn't very far. That was the NDX. Then we look at the OEX, and we actually got some bullishness today. 9.68% moved back up to the upside in the S&P 100. So you kind of get how hopefully you guys are getting how this works. It's really just a gauge of where the risk is in the markets. It's a little all over the place lately with volatility, and which is handy because we trade automatically with our algorithm. Um, Actually, 3 algorithms is what I trade with. The Russell 2000's right here, RTY, and this is the short-term contract. This is the quarterly contract, and it looks terrible on this chart. But in the long term, it's just fine. It needs to just basically get up here and refill in this gap and start putting in new green peaks like those. And if you follow me for very long, this is the NASDAQ, and it was looking terrible, and now it looks pretty great. So this is the quarterly contract for the NASDAQ. And if you look at it on a short term or on a longer term chart, this is 6 months. I mean, when we were talking about it back here and it felt terrible, well, it had to fill in the gap, and that's what it did. Filled in the gap, and now it's going on to new equity peaks, which is what the green dots are. And then here's the Dow, literally the Dow Jones. Its last equity peak is there, and without being in the software live, I can't tell what that date is, but it's not very long ago. And this is what it looks like on the 6-month chart. That's that recent equity peak, but we need to get back up here so we can fill in the whole gap. From time to time, I'll go ahead and put the actual trades on here so you can see how this thing trades. You know, wins and losses for the day, and on the weekend I did post wins and losses. It was actually for most of last week. So that is it, guys. The Fed thing is going to create a lot of volatility tomorrow, and really just you have to have either your stops in place or your strategy in place, or sit on the sidelines. These automatic trades, they love volatility, and that's what makes us get up and going. That's why we do it. So take care, good trading, and have a great evening.